welcome to TheoTrade. This is Don Kaufman. February 8th, 2023. Just about 15 minutes to go to the cash close here on this Wednesday afternoon. Some sell-side activity in the S&Ps. Nasdaq down almost 2%. It's got everybody asking the question, will the gamma squeeze turn bearish? Listen, if you're not into, the terminology of what a gamma squeeze amounts to, do not worry. I am going to cover that here, of course, on this evening's video. But before I get there, listen, again, a lot of price action in today's market. I want to cover it. But for just a moment, I want to push all of that aside, because one of the things that's coming up just incessantly in email, in the TheoTrade chat room, I mean, we have had hundreds and hundreds of questions about this, basically regarding the rally, okay? And if you look at the rally right now, well, listen, I'm a big time premium seller, which in effect means, like, listen, I'm going to sell premium when the markets are a little bit higher, whether they're lower. But of course, everyone's listening to the mainstream media. And in the mainstream media, all they're talking about right now is the incessant rally, the rally that could be, okay? Let's start with a conversation, if you will, about the rally. Then we're going to spin back around, maybe talk a little bit about the S&Ps, a bit about the gamma squeeze. We can even talk about some of the hype around, chat, GPT. Yeah, it's exciting. But before, again, we go anywhere, I want to talk about the most recent rally. And the question that, comes up most often in my mind is, how is this rally different? Is this rally different? Different than what? I don't know. I mean, I'll just make the point right off the cuff over here. Like, look, that's a pretty phenomenal rally. This is a pretty phenomenal rally. This spectacular rally. I'm just on a 9-month chart. One of the things that I want to point out is that Wall Street, okay, as a whole, and I'm going to close up this left side bar. I know there's only a few minutes left in the trading day. I'm going to close it up. Wall Street as a whole loves the story of, look at 2023. The January effect. What is the January effect? Ultimately, we've had a rip in January. January closes out the month. You have like an 8% rally, yada, yada, yada. That's the number they're going to go on. So right now, even with today's sell side activity, the S&Ps are still up about 8%. And you go with that. And of course, if you're kind of tuning into TheoTrade, you're probably at this point, you're frustrated because you're like, I didn't capture this rally, man. And you're selling premium. Listen, I'm selling premium, just grinding out, a living. It's it, and I don't mind saying, yesterday the markets were up quite big and today they're down pretty good. A little give and take relationship, but every day that passes, I'm collecting $100 in this account, a few $100s, of course, over here. This is tasty. Let's actually open up all the accounts in here. It's a party, people. So again, I'm trading a lot more on Tasty lately. So I'm collecting a few $100s here, a few $100s here. But, how is this rally any different? Because I'm just going to go off for a second about this and just tell you right now, I'll tell you how this rally is different. It pales in comparison to some of the other rallies that happened in 2022. That's how it's different. It absolutely pales in comparison. Have you not looked at your own statistics to look at this rally? And again, I'm going to use a drawing tool in this particular case. And yeah, I am going to go off a little bit because Don's getting angry, but I'm just going to bring up a trend line. And the reason I'm going to bring up a trend line to show you, if I click here, just a quick trend line, right? What you'll see is right in this neighborhood, right in the middle of it, okay, it's actually showing you the percentage. So if I go from absolute low to the most extreme high over here, you have about a 10% rally. Okay, that's basically from the beginning of the year. Now, I'll leave that little trend line there. Okay, but what about this rally? Well, right here. Right here comes from the absolute low. Let's say you caught the absolute low, right? You caught the low inside of the S&Ps. You rallied all the way up, to where we were in mid-December. What's that? Holy crap, that's a 16% rally. So you've already learned that the rally at the front of the year is minimal compared to the rally back here. That's 16%. Even if you chopped off the absolute low, okay, let's just say you hopped in somewhere along here, that's still a 13% rally. What about this rally right back here? Oh, there's that one too. Yeah, that one's good for almost 16%. But wait, there's more. There's another one right back here. There you go. That one was meager. It's still 10%. The point that I wanted to make just right off the cuff. And again, I'm doing this because how is this rally any different? Okay, well, I'm going to tell you how this rally is different. It sucks in comparison to the other rallies that we saw last year. That's why I'm still of the opinion, absolutely of the opinion, listen, the Fed's still in your face. There's still all kinds of economic issues. Why? We got a little hopped up because we got Chat GPT. I got to get in on those investments on the Chat GPT, which is nothing more than a hype. By the way, I just want to show you something about Chat, GPT and some of the hype around it. The hype, it's starting to wear off. So Microsoft, on that news, big key reversal in today's trade. Moreover, if you're not following Microsoft, you'd be following Google. Google actually said they're going to come out with a competitor, of course, to Chat, GPT, their answer to it. Yeah, the market's not listening. It's down almost 7.5%. But here's the more interesting ones, okay? Baidu actually said that they have a competitor, okay, for Chat GPT. Yesterday, huge rally. Today, key reversal, we flip over. Moreover, today, Baba also came out. Alibaba came out. You do realize that no one's actually seen anything out of Baidu or Baba just yet. Doesn't seem to make a difference because the stock in the overnight trade here, Alibaba was all kinds of bid up almost to the 109 level, completely reversed. Okay, the hype from Chat GPT is it's over, people. It's over, at least for the time being. And I wanted to bring that to your attention because I think, at the tail end of what has been a pretty wicked rally, from the beginning of the year, I'm not going to dispel that the marketplace rallied over here. Look, it rallied. But this rally is very minuscule in comparison to some of the rallies we just had a few weeks ago. How come a few weeks ago, everybody was still, yeah, but the year sucks? What? Because we actually crossed over. It's a new year. Okay. Do you think that actually makes a difference? All right. Does it really make a difference to you? Okay. It's a new year. And the only people it makes a difference to is Wall Street, who are trying to get as much of their hands on your money as humanly possible. So they go with the notion it's an 8% rally. I don't feel like you missed out on anything here because I'm going to tell you right now, I'm not here to tell you whether to get bullish or bearish. I'm not. I'm here, though, to tell you right now that this rally, it's fairly meager in comparison to the other rallies that we've actually seen last year. Okay. I mean, rallies are the hallmark, okay, of some of the most bearish marketplaces. And as I said, I'm not going to tell you here to bear up, but I am going to tell you if you're going to get bullish, if I were you, I would define my risk because otherwise you're going to get absolutely destroyed when markets do pull back, and they will pull back. There's no question about that. It's just how fierce that pullback is going to be. And again, as I was saying, like last week, I don't exactly see any, green shoots over here of it's going to be a new bull market. Hey, I'm the first one to tell you, S&Ps, if they break above 4211, they have a good shot getting all the way back to 4,400. Nevertheless, okay, I think you have to anticipate at any point in time this rally could cease to exist because very likely not a rally. As I said, it's very meager in comparison to the rallies from last year. So how is this rally any different? Well, the answer to that is it's much smaller than the rallies that have happened in 2022. I'm going to let that one die. Again, Chat GPT and all the hype looks to be actually fading into the sunset. Last but definitely not least, I want to talk a little bit about the gamma squeeze. The gamma squeeze. Well, the gamma squeeze turned bearish because today things look a little bit bearish. For those of you that are not familiar with the idea of a gamma squeeze, I'm actually going to talk a bit about the gamma squeeze as a whole, and we can use products like, for instance, Tesla. Okay, and I'm just going to highlight a very bullish move this morning inside of Tesla. When I start talking about the gamma squeeze is, it's almost like a self-fulfilling prophecy or like a feedback loop that can occur in a given stock, right? So let me explain exactly how the gamma squeeze can perpetuate itself. All right, right here at the opening bell. At the opening bell, you're a retail trader. Retail trader comes in there, okay, and you buy a 10 lot of calls. Now, when you're buying a 10 lot of calls, what are you really buying? Okay, you're buying a whole lot of positive delta. How many positive deltas are you buying? Let's say you're buying 500 positive deltas. So you bought some at the money calls, you're buying 500 deltas. Okay, now, whether you know this or not, somebody has to be on the other side of trade. You just can't buy calls out of thin air. Somebody has to sell them to you. Go, who's going to sell them to me? The market maker. So let's put MM. So you are an R. You stand for retail. MM is the market maker. The market maker will sell you, okay, that 10 lot of calls, and there'll be negative delta. And with the negative delta, what's their negative delta going to look like? Oh, negative 500 deltas. So what does the market making side of the business do? Let's just A little line here. What does the market making side of the business do? They don't just take negative 500 deltas and turn around and go, I hope we'll go down. Most of the market making side of the business uses bona fide hedging activity, better known in some circles as relatively delta neutral. So the moment that the market maker sells you, okay, the calls, instantaneously they use a hedge. They go out and buy 500 shares of stock. Why do they buy 500 shares of stock? To neutralize all the directional risk. So now that the market maker has neutralized, okay, their directional risk, by buying 500 shares, that's actually perpetuated a little bit of an up move in the stock. Okay. Now you do realize that somebody else could come in and buy another 10 lot of calls. If they buy another 10 lot of calls, what it's going to do is perpetuate more, okay, more what? Hedging activity. The hedging activity of buying shares, okay, starts to cause us to rally. But here's the cool thing. If you buy another 10 lot, this original 10 lot, okay, comes out of balance again, and that original 10 lot has to be rehedged. So not only do they have to buy another 500 shares here, but they probably have to buy more shares to hedge the original shares. So you start getting this perpetual feedback loop, and effectively what you get with a gamma squeeze, okay, is this upward momentum. So the idea is, well, can a gamma squeeze actually happen on the downside of the marketplace? Absolutely, unequivocally, yes, of course. In fact, those are some of the biggest squeezes that we've seen. Is ultimately, okay, start gamma squeeze, it becomes a self-fulfilling prophecy, a little fantasy, if you will, to the upside. But what do you think's going on in something like Google today? Sell side activity, it kind of mellows out and so forth. But one of the things that we just haven't seen, okay, in some of the recent trade is we haven't seen a big gamma squeeze to the downside, and that's something that very well could be on the dance floor. Why do I say that? Take a look over at the SPX, and I'm going to tell you exactly why you need to be a little concerned over the next 2 days of trade. Forget about news, put the news cycle, forget about Fed, put the Fed cycle aside. Everything's about hedging activity at this point, right? And the move this week, and again, I want to remind each and every one of you, so we do calculate the expected move each week, and we leave it right here in my little scratch pad, the bottom of the screen. You have about a $76 move expected throughout the course of this week, right? So throughout the course of this week, we are expecting a $76 move. Now that move can be $76 higher or $76 lower. What have we done thus far? Basically nothing. And we started the week where that central line is where we started the week. Where are we right now? Here. So we started the week, somewhere around like 41.38. Where are we right now? A couple of points lower. Basically 20 point move inside of the S&Ps. The way I see it, there's a whole lot of room for improvement to the downside, a whole lot of room for improvement to the upside. But right now, the market is starting to buy some volatility. Vol futures are actually up a little bit. Don't even bother looking at that. The dollar is a little bit big. There's some signs right now that we could absolutely turn bearish and we start to squeeze to the downside. So it'd be like retail traders rushing in to buy puts and professionals rushing in to buy puts, which is causing the market making firms to hedge, and market making firms hedge. They'll actually sell S&P futures and drive markets effectively lower. Now, that doesn't have to perpetuate itself. We don't have to necessarily be bearish, but it's critical to understand, okay, the upper edge of the expected move here is, basically like 42.13, correlates basically to the 42.11 inside of the S&Ps. To the downside, though, we have about 40.60. I'm going to tell you right now, keep your hands and feet inside of the vehicle throughout the end of this week, because I'm going to tell you, we are going to move. Okay, we're going to move. We've got some decent, price action still poised in here. There's over $50 of price action that is positioned between now and the Friday expiration. And again, with this, like, am I looking for a little bit of a bearish move? Sure. Like, look, we've had a one-sided move. As I said to you, this rally could be kind of fading. It hasn't done anything really in the last week. In fact, when you look back, there's about a minute left to play inside of the game. When you look back exactly a week, here's like last Wednesday, here's Wednesday. Where are we right now? Massively unchanged over a week. So the rally is completely stalled out. Maybe we reverse course, no squeeze, nothing. Some of the chat GPT hangover is starting to wear off over here, and people, things are about to get a little bit more nutty. Again, volatility is on the bid through and through. You can even see the VVIX up almost 12%. Listen, somebody is buying volatility right now. So as I said, hands and feet inside of the vehicle into the end of this week. We're prepared to make a fairly substantial move. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.